Today is a good day. Stop gazing how to structure UK property investments for sustainable cash flow. Today, we're going to break it down with the expert, Mr. Andrew Chung of NPP Residential. He's going to share on how, now that you've gotten the mortgage, so how do you start making money, monthly cash flow? Because without cash flow, then the essence of real estate investments is defeated. So it's going to be sharing with us on how you can restructure your mortgage and then start to earn income, break it down to the commonest way, deeper, breaking it down to the UK property into monthly rental, how you can earn capital appreciation, long-term wealth creation. So if you are watching us around the world, or you are in the UK, or you're in Africa, Europe, Asia, wherever you are, Caribbean, we welcome you to this podcast today. My name is Mwali Tucci, and with me, special guest is Mr. Andrew Chung. Mr. Andrew Chung is an expert from NPP Residential, a UK property company, one of the best UK property. Today, Mr. Chung, can you say hi to those who are watching us right now?
Hi, thank you for having me on, wherever you may be, wherever you're watching from. No, I'm happy to share my knowledge on how you can make money in the UK property market.
Awesome. Thank you so much, and Happy New Year. This is our first podcast for the year 2026. We are delighted to have you again after some while. And let's go without much ado. How do you actually structure the deal to make real money?
So, as an investor, let's say is £200,000. You don't want to put £200,000 plus all your costs down on property. Ideally, you want to put less, and then you want to leverage the money to, so you're having to put less down and benefiting from capital appreciation. It's a larger portion. So any equity growth. So let's say it grows 5% a year, which is what, £10,000. Let's say that £10,000, you start off with equity of £50,000 a year. Every year that's 60, 70, 80, 90, £100,000 in 5 years. That's your equity. And then when you work out there in the revalue of the property, etc., you can pull out capital just to maintain the loan. And I think the best way to structure it, in a limited company, not using the majority, use the bank's money as well.
Fantastic. Okay, so looking at that, many people who are watching us right now, whether they're living in the UK or outside the UK, new property investment, those who want to go into real estate, they don't know what exactly. Some of them have the money in the bank. So how do you tell them if they put in, like you mentioned, £100,000 and that's the equity? So how then the growth is margin is 5%, right?
Yeah. 5%
okay,
per year.
So what per year? Okay, so why should they go into the real estate for 5% when they can get something above that, that sector?
But then let's say you put down a mortgage. So let's say you get a 25% deposit. So your investment amount, your deposit amount is only £50,000. So your £50,000 invested, and let's say it grows by 10%. No, that is what, 20% growth on your capital invested. So it's not the full So if you work out on your capital employed, as we call it, so ROCE, then the actual return is 20%, not the 5%, but it's 5% of the property price. But you're only invested, let's say, if you include stamp duty and everything, let's say you invested, what, £60,000. Then it's £10,000 over £60,000 as a yield, rather than £10,000 over £200,000, because you haven't put down £200,000.
Long-term wealth creation, equity, and building long-term portfolio with the UK property. So if you are watching us around the world, we want to analyze and real estate opportunity in the UK, in Manchester, Birmingham, from Liverpool, all over the UK. There are so much billions of pounds to be made in the UK property market. So this is one of the best place to put your money. You put your money where your heart is. Mr. Andre, I was speaking to you. Pardon us for the breakdown along the line. So we're on the line of thought. Why I asked you, because many our podcasts have been asking us, why should they put their money if the UK property market is 5%, when they can get more in other sectors? Why should they be investing in the UK for 5% return on investment every year?
So that's not the full return on investment, because that's just the equity. That's just the equity on the property price. So that's one part. Okay. But if we work it out of what actual return is on investment, we have to add cash flow and equity together for combined yield. So on cash flow, the average could be anything. If you're getting a mortgage, on a property, the cash flow is your gross rent minus your management fees, service charge, and your mortgage, right? The average on cash invested could be anything from 5%, depending on location, all the way up to 9-10%, and that's just on standard long-term rental. But then the service accommodation side, you're looking at about 9% all the way up to 14-15% in certain locations. So that's just cash flow. But if we work out, I like to say it's 5% capital appreciation, because I like to be conservative. Over the last 100 years, if you annualize capital appreciation, you're looking at about 7.6%.
Okay, so we're looking at between 10% and above.
So if you combine them, if you get a mortgage on a 20.5% deposit, your combined yields could be anything from 21% all the way up to 30 something percent.
Okay, that's fine. That's cool. That's it. But 30%, 20 to 30% return on investment. Of course, before all that deductions, right?
No, that's after all the deductions.
Oh, okay, that's fantastic. So if you're watching us right now, so if you put the money, £100, £1,000 in the UK, you pay 20% down payment, and then the mortgage for the rest of the year payment and monthly payment and all of those maintenance, interest rates and all of that. So you'll be having 20 to 30% return on investment after the deductions of others. Move forward for those who are watching, because they need to understand whether you are living in the UK. We've already, in our previous podcast, Mr. Andrew spoke extensively that you don't need to live in the UK to invest in the UK real estate property. So the NPP is there to be your nose, your eyes, and their ears. So they are there to take care of it. And that's why we're talking about this, because most of you have your money locked in the bank. And then maybe you live in a country where you have constant fluctuations on your currency. The currency has been devalued. You can move your currency, your money, into the UK property real estate. You can't lose the money because the law allows you to invest. And then you have a property manager, which are reputable firm, property firm, the UK, one of the best UK real estate management company, NPP, so residential. So you're going to be, the essence why we're discussing about this is nothing but to show you investment opportunities, to expand your portfolio. And then you deal with the right people who are going to guide you step by step until you start earning wherever you are in the world. So when you're making it in your own country, you can pull the funds to the UK property through the property managers who are going to help you. We're going to be going to the second one. People are asking how to analyze a property before buying. Mr. Andrew, people are asking how do you analyze property for the first-time investor or first-time property buyer, whether homeowners they want to buy and live or buy and rent. So how do you analyze to know the best property to buy in the UK?
I think if we are looking back into how just over time, people always pick location. It has to be a good location. And when people say location, there's a meaning to that. And when they say location, it means you break it down, investment case. So what's the investment case? Where is the capital appreciation coming from? Where is the rental coming from? Where am I going to maximize premium rents? Where am I going to get the demand? What regeneration is going on? And it's different for buy-to-let and service accommodation. Service accommodation, you want to look at it. It's still location because you need to be in areas where you have a demand for short stays. Now, if you're not in an area where you don't have that demand, you're not going to maximize occupancy, you're not going to maximize cash flow. So when we look at property, I'm looking at the surrounding area. I'm looking at the what the rents are. Is there demand? Is there a regeneration plan? What investment is going on in the area? If there's no investment going on in the area, that's a automatically no from my side, because then I know there's no guarantee of accelerated capital appreciation.
Fantastic. So when you talk about regeneration, for those who are first-time buyers, those who have no extensive knowledge of real estate investment, so what do you mean by that?
So regeneration is for instance, let's say an area of land is barren. There's nothing on it. There's no infrastructure. There's no office buildings, there's no retail, but the council has worked with people, developers, etc., and come up with a plan of what they're going to build in the area. So there's commitment from the council and there's commitment from developers. We're going to build however many square foot of office space. We're going to build however many square foot of retail space, etc. That's what we call like a regeneration plan. They have hope. They have so you're driving employment. You're driving values up because you're improving the area.
Yeah.
You're adding value to the area, which is adding value to the property prices around that area.
Yes.
And that is why it is an important key thing for me when I'm looking at property. Does it have an investment case? Is there going to be capital appreciation? What's the chances of this thing, etc. And if we're looking at UK property, that's what we're looking at.
Okay. Fantastic. This is just for the audience and those who are watching us around the world. Are going to be watching this you on YouTube. They're going to watch it on different platforms, so they could be able to be well educated of the regeneration that you're speaking about. So we're looking at buy-to-let versus serviced accommodation. So which pays more for those who might want to buy to let or those who might want to do for service accommodation. So which one pays more based on your experience and some of the clients that you are servicing right now?
Yeah, so based on the clients that we're servicing right now, they are seeing high occupancy. So average in the Greater Manchester area, you're averaging 86%. So 86% of the month is being booked out, or 86% of all of last year was booked out.
Right. Wow.
The average length of stay,
6 to 8% already booked out.
86, yes. So the data for 2025 from the 1st of January to the 31st of December, all our clients' properties, which are running service accommodation, they were booked out 86% of the time.
Wow.
So because of the work, so when we're analyzing where to buy, etc., because we've done all the analysis of being an area of demand for short-term lets, etc., they've been able to see high occupancy. Now, if you don't do your homework, people are, but this area is offering short-term lets. But when you look at the area, we look at the price, and we're thinking you're only going to get 60% probably occupancy. So we are very meticulous in how we pick properties, making sure that clients have high occupancy and maximize cash flow. I like to work on 80% occupancy when I'm doing my figures, when I'm doing my financial model. But I've seen time and time again, my clients are beating that occupancy rate.
Wow, this is interesting. So whether it is buy to let or service accommodation, so both of them pays, and there's no time where their properties or their rental properties will be idle. Is that what you're saying?
So buy to let, the average time for completion to get a tenant in now is within 2 weeks. Because of demand. Yeah. Okay. With short-term lets, we start getting bookings not straight away.
Okay.
And
in terms of go ahead.
If you want to maximize cash flow, service accommodation is the way to go.
Okay, so and again, location, like you said, is the key word.
Yeah. Location is the most important thing when you're looking at investment.
Right. So so like how much is it in a month or weekly, daily for the service accommodation? Is it monthly? Is it daily? Is it weekly? How did you charge?
Daily. Yeah. So let's say the average price a night is £120. Let's say there's 365 days a year. Let's work out on 85% occupancy, which is 310 days. So 310 days times by £120 a night is £37,200 a year.
That's correct.
Which, if you divide that over months, that is £3,100 per month. Yes, there are more costs, but you have doubled your rents.
Wow, this is interesting. I'm thinking, and those who are watching us right now, listen, what Mr. Andrew is working here, there is no border restriction. You don't need to live in the UK to make this money. Once the money is coming from a genuine source and clean, transparent, you will be earning while you live wherever you want to live in the world. And then Mr. Andrew and the company NPP Residential will handle everything from identifying the best property for you to buy, to negotiating with you to get the best deal, and also with the mortgage financiers. So those are the work they will do for you. And then you start earning and have a 20 to 30% return on investment. And like you said, almost fully booked. The minimum waiting for them to get rental, your property rent out, is 2 weeks maximum. 2 weeks, and then you have your properties occupied. So, Miss Andre, the investors are looking, and those who want to start or live in the UK. So, last time in a podcast, you made mention that even if there is nobody occupied the property, that you guys pay. Is it? Can you emphasize on that?
So, if say, I don't remember that comment, but I do remember something. So, we do have rental insurance for our clients.
Okay.
And let's say if you have a tenant in your property that might struggle to pay rent on time, the rental insurance will pay you so you can pay your mortgage, and then the rental will be recovered from the tenant on that side. So even though the tenant hasn't paid, as a landlord, we do have rental insurance in the UK, so that you are securing your rental, especially if you're getting a mortgage and you need it to be paid. Having rental insurance is something that we offer to clients, especially on a mortgage, so that their rental can pay off every bill that they have related to the property and keep it running smoothly. And I think that's what I mean by, even if the tenant hasn't paid, you will still get paid your rental.
What you're saying is that there's insurance cover, and also the landlord or the landlady is still going to earn income or protected through the insurance. Is that what you're saying?
Yeah.
Okay.
Yes.
Fantastic. Yeah. So why we emphasize on this is people are going to watch this after the podcast or probably live streaming. So we are educating them. There are a lot of people who do not know that they can invest in the UK and still be in their home country and still earn return on investment, plus their capital contribution of that property, and say 30 years or 25 years. So you pay monthly mortgage. And these things are happening. People are making money, but they will not tell you how they're making the money. And that's why we are discussing this. So you'll be able to be aware the opportunities around you or far from you, but you can still get this done. If you are watching us, the NPP Residential is the best real estate company. They've got a lot Marius Award as the best UK real estate company, and I have been opportunity to go to visited their office in Manchester. So please, you are dealing with a reputable firm that have been in business for decades, won award, and they have nurtured, made people to become millionaire in pounds, become billionaires in pounds. So if you want to start your real estate journey with the MPP, I recommend you search them, or you reach out to Miss Andre. He's going to guide you transparently and lead you to start earning, instead of leaving your money to the bank, because the bank is trading with the money they're loaning out that you don't want to take. So, Miss Andre, what part of the UK do you think is the best place that with the strong rental yields? People are looking at the 2026.
The northwest of England. So, Manchester, Liverpool has the strongest rental growth because of the movement of people to these locations is greater than other locations at the moment in time. We're seeing movements of businesses from London. We're seeing movement of people along with those businesses as well, and they're bringing their higher pay from down south up north, which, when you have high disposable income in the market, push up rentals. But if you have more people and less properties, that's just going to push up demand, and the average applicants per apartment on a buy-to-let basis, you're looking at 20 plus applicants.
Fantastic. So you look at Manchester and then up northwest. When you talk about up northwest, is in Birmingham? Is it for those who are watching?
Birmingham's more Midlands. It's
okay.
If we're looking at yields, so if we're looking at rental yields, the price is slightly higher than Manchester, but the rentals are slightly lower than Manchester. So the rental yield is lower than what Manchester is currently offering. It's still a strong investment case because there's strong capital appreciation prospects. Your rental yield will be slightly lower, but it'll still be a very good yield. And especially as an investment, it will still be very good combined yields. But if we're looking at strongest yields, we're looking at the northwest of England, which is Liverpool and Manchester, and the surrounding areas.
Okay, so what we're talking about here, I have the privilege of being taken by Mr. Andre to those sites, those ongoing constructions, and those completed ones. So if you are planning to go to the UK for explorative visit, I recommend you try to visit Mr. Andre's office, the NPP Residential, so it can take you on site inspection, so you can have one-on-one and the physical, because we're talking about the physical asset here. So it's something you can feel, you can touch, and then you know where you want to invest. So it's not a paper portfolio investment. This is real-time investment, and then real stuff that you can feel and you can see what you are investing upon. So I recommend when you are, taking a trip to the UK, contact NPP Residential. They will be very happy to drive you around. And then for those who are in London, they're looking at London, that they might probably have more high ROI than Manchester, Birmingham, Liverpool, as you mentioned. So what do you think? Can you address that so they can understand what are the different, why they should invest in other places apart from London? So, Mr. Andre, how do they calculate return on investment the right way? Most of people, investors and first-time investors are working on guesswork. So how do they calculate their return on investment the right way?
Definitely. If you're calculating return on investment, it's the investment amount that you've put in. So not the property price, because you haven't put in the whole property price. You put in a deposit, you put in stamp duty, you put in legal fees, etc. Right. And that will be your investment cost. So let's take the £200,000 property. Take the £200,000 property, your, let's say, 25% deposit on a 75% loan to mortgage, £50,000 plus your stamp duty, that's £12,000, so £62,000, plus your legal fees and other fees, etc. Let's say total £65,000 to invest in a £200,000 property. Theoretically, yes. So that is your investment cost, and that is how we work out your yield, your cash flow yields. So let's say on a £200,000 property, you get £1,200 a month gross. From that, let's minus management fee. Let's say that's £150 minus your service charge. Let's say that's £150 as well, minus your mortgage on £150,000, which let's work out on the average. Let's say it's £450 on average now, 500. Let's say £500 just to make it lower. So from that, you get £400 a month, which is £4,800 a year. And then over that, your cash flow yield on £65,000 is 7.38%. Then your yield on, let's say it grows by, let's work out the capital appreciation yield, which let's say it's £10,000 a year. So 5% of £200,000, £10,000, and we'll work it conservatively. £10,000 over £65,000 is 15.38%. And then when you add those two together, so 14,800, your combined yield, 14,800, so it's the rental yield plus your equity growth. Over £65,000, that is a 22% yield. So that is your return on investment combined. So you got your cash flow, which is 7.3% yield. So return on investment on cash flow. And you've got your capital appreciation, which is 15 point something percent. And then you've got combined yield, which is 22.77%.
Wow. So you have 16, you have 22.
Yes. So when we work out a yield, we work it out based on your capital that you've put in. So the investment amount that you've put in, the costs, everything. And whatever cash flow you get, that's your cash flow yield. That's your rental yield, as we call it as well. And then you've got the capital appreciation yield. And when we combine them, your combined yield is 22%. So it's over 20%. So that's how you would work out return on investment.
Yeah, we're struggling to hear you. So can you give a summary, a quick summary of exactly how the easiest way, or the summary of how they can, using your illustration of £100,000 as your initial investment, and then what, because every investor is interested on return on investment, the yields, and so on and so forth. That's it.
Yeah. So if we work out what yield is, it's what your return on investment is cash flow. So your cash flow plus your capital appreciation, what you ever get every year, divided by your investment cost. Not the property price, because that's not your investment cost. Your investment cost is your deposit plus your stamp duty plus your legals. Yep. And that would be your return on investment. So you work out your cash flow from your rental minus all your costs. So your management fee, because it's fully passive, you don't want to manage it yourself. So management fee, service charge, and mortgage. And then add on your capital appreciation. And then it's all over investment costs, and that's how you work out your return on investment. And the average that you'll get in the UK minimum is about 20%. And then it can go all the way up to, if you're doing service accommodation, could go up to 30%.
So in a month, cash flow will be how much? For example, using the initial capital.
Yeah, so it depends on the property. So
using the
100,000. Let's do it on the £200,000 because it's just slightly easier to work out than the £100,000. So cash flow from a £1,200 in rental. So what you get every month is, if you minus your £150 in service charge, let's say, it's not going to be that much, but I'll just put it that much because I think it's better to be conservative, etc. So yes. £150 service charge, £150 management fee. That's £900 left.
Okay.
And then your mortgage on £150,000, what would that be? That would leave you, if you manage the mortgage payment, which is £500, £400 every month cash flow. So your cash flow would be £400 a month.
Oh, how much did this is that?
Which
£400
is
a month. That's a lot.
Yeah.
That's a good business. Okay.
Yeah. As a yield, it's 7.38% on your investment.
7.38%.
That's As a yield, that's a good yield.
Okay. That's a good year. That's what I'm talking about. So listen, why we are walking through this problem is we want people who are watching us, those who have been following us, and those who are still going to watch this podcast streaming live, unedited, so that you can understand why we are talking. We are so passionate about real estate investments in the UK, particularly, where we have a reliable company that can take care of your investment, turn that investment to cash flow, and also you have equity that you can buy. So, Mr. Andre, we're going to be talking because we have other appointments to catch up and all that. Maybe now follow-up podcast, we'll be talking about how someone can have one property and from one property to 5 properties investment. Maybe we will have that on a single podcast where you can walk through to audience and those who are going to watch this podcast so that they can know how they can start with 1 room, bedroom, and build 5 bedrooms, because that's where the money is and that's where the secret is, and where they can start to build incrementally and then build their wealth. When we talk about real estate being a wealth creation, a generational wealth, that's where it all starts. Ladies and gentlemen, Ms. Andre, how can they contact you as we wrap up right now?
So you can contact me via NPP Residential. If you put in an inquiry on our website, so nppresidential.co.uk, if you put in an inquiry on the website and quote TD Studio Hub, then I would know that that's one of us, one of you, and then I can give you the financial analysis, etc. Or you can contact me on WhatsApp if that's what you prefer. My number being +44 for the UK, 7943 940 160. Both ways would work. Or you can either contact me by email at Andrew at nppresidential.co.uk. If you quote TD Studio Hub, then I know that that is where you've come from and I can best serve you. If you also contact us through the website as well, you see a development that you like or you like the look of, you can inquire. Also put TD Studio Hub and ask for Andrew, because we do have many colleagues in the office as well, so they might not be aware of this, but you still get a great service from them. And also my direct line WhatsApp number is +44 7943 940 160.
Fantastic. This is great opportunity. I recommend any one of you who is watching us or who is going to watch to find time to visit NPP Residential in Manchester. If you are going to the UK or you're already in the UK, please make time to connect. You might be growing or you might be losing money investing in the wrong sector when you have an opportunity to grow your income and to have cash flow uninterrupted. This is guarantee that the NPP Residential is giving you. Everything he said here is going to be on the paper. If you subscribe to any of the ongoing projects or probably off-plan projects, you're going to have everything documented and their property will be secured. And that is the guarantee. We want to thank you, people around the world, and those who are living in the UK or probably living in Nigeria, in Africa, in Asia, Europe, or Canada, USA. Please connect with us, connect with Mr. Andrew Chung, and also with the NPP Residential. Start your real estate investment. He will take you. If you want to book one-on-one consultation, he's available to catch up with you on virtual meeting. If you want to visit the office, the opportunities are there. They're going to assist you to do whatever you want to do and start your real estate journey. And this is the beginning of the year, and this is the best time to start Want to thank you, Ms. Andre, for taking time at the
thank you very much
minimum
for having me.
notice to join this podcast. Yes, we have different interruptions, but again, we've been able to make something substantial on this podcast. We believe our audience have learned so much from your knowledge and expertise. Want to thank you, and do not forget to subscribe to TD Studio Hub, comment, share, like, and follow us for more, because we'll be having Mr. Andre on a regular basis. Thank you, Mr. Andre, and have a great day.
Thank you very much for having me on. I really appreciate it, and I'm glad, hopefully you guys have taken a bit of knowledge from me. And if you have any questions, feel free to contact me anytime.